Hello, hello, hello. Good morning, everybody, for the second time. If you didn't catch the first stream this morning, I did a little bit of a market recap on Hex with Silver the Antidote and Crypto Sloth, and we kind of did our closing statements on the Discord, which ran for 6 months solid, and we had a lot of good support. And appreciate you guys for doing that, being a part of that, and for the opportunity. If you didn't get a chance to check out that video, go check it out after the show. So I got with me this morning Deputy Shreds, aka Ryan Hefner, the man, the myth, the legend. I'm bringing you on now.
I'm already laughing, man. You had to open up with that name. That's my old Telegram name from when
Hey
I first
man,
got into
this
Hex.
guy shreds, bro. Look at his
Good
picture.
morning.
And he
Good
still
morning,
looks
good
like
morning.
that too.
I'm currently bulking right now. Actually, I'm up about 15 pounds at the moment. I've been gaining weight slowly, about half a pound to a pound average on
What
the
the
week for
hell?
about 4 months straight, man. Hanging tight about 3,300 calories a day. But
All right, sorry.
the
Deputy Gaines
shreds,
in the chat.
yeah, the shreds are beginning in mid-March. That is
Yeah.
where we get ready for the impending bull, and of course,
Yeah.
we'll be ready for the hot weather.
Why
Yeah,
don't you
man.
give them a little bit of a commentary on what you think? Like, you don't want to be fat in the bull run, bro.
Yeah, dude. I mean, Hex is the community to be at. You already saw the amazing events that had happened already. There's actually that Hex cruise, and I won't be on, but there's a Hex cruise that's happening. You don't want to be the one person that's out of shape and not understanding what's going on and how to do this process while you're making a ton of money. Don't be in that position. You're going to regret it. I'm telling you, man. Learn this process now. It's only going to be with you for the rest of your life, right? Crypto may not be there the rest of your life. Hex may not be there for the rest of your life, but your health will. Don't get caught getting wrecked, because if you're in a hospital, no one cares how much Hex you have. I'm going to word it like that. No one cares how much money or Hex or any of that stuff. Work with people that have a ton of money, and they don't care when they're in the hospital.
I mean, most of your gains are going to be going to hospital bills at that rate. So, not very smart use of money.
Yeah. Yep. That's a whole other discussion. But yeah, man, right now is always the best time, right? It's like, oh, I'm waiting till spring, summer hits to do or whatever. It's like, it doesn't matter, man. Just get started. There's always a summer season coming. And if you have enough money with Hex, you can just live somewhere where it's sunny and hot all the time. So you really don't have excuse, right? Why would you be living somewhere like New York? No offense. I was stationed there for a long time. Why would you be living somewhere cold all the time if you're retired? So all that to be said, yeah, man, now's a good time to get your stuff in order, because once the prices are going up, all you're going to be worrying about is going out and meet people and doing things, and you want to be confident and also in a good place physically standing to do so. So yeah, definitely a good time to do that when things are kind of boring. Things are boring right now. There's really not much to do other than DCA if it's applicable and you have the income to do it, and just wait. Like, this is the best time. No excuse. When the bull market comes, everybody's going to be flooding in. New community members are going to be coming in. More videos are going to be coming out. It's going to be busy as hell. You don't want to be like stuck screwing around, going out to eat and dinner with Hexkins, gaining weight, and having a lot of structural issues there when the bull market's here, because you're not going to be wanting to lose weight during the bull market. I'll tell you that right now.
The other thing that's good probably to bring up is, like, you guys, if you're not prepping for something that's not predictable, like what happens if you died tomorrow and you got like 100 million hex staked up and nobody has access to it? Something to think about. Like, maybe there's a plan that you can set in place so that if something critical did happen, that there's a friend of yours in crypto that could help your family recover those funds as it went out over time. Because too often in crypto do you see the inheritance plan not get played out. I've had friends that have passed away that had Bitcoin that they purchased at $3,000 or $6,000 that's gone in the ether now because nobody knows how to access it.
Yep, that's a good point too, man. That's a really good point.
I mean, we have such a long-term staking mindset, but we're not thinking about the inevitable. Why did we decide to close the Discord? Oh, it's just temporarily closed. It's not permanently closed. Silver's actually revamping it in anticipation of Pulse Chain, so it can be the best product it can be. Obviously, that Telegram or that Discord channel was launched in preparation for the HSI auctions with the Icosa contract, and so there was some price appreciation that occurred around that event, and then after that, obviously data changes, markets change, and so everything just needs to be revamped and updated. And Silver will let you know more about that when it goes live. What up, Silver? Beast mode, beast mode, beast mode, beast mode. Yeah, man, I see everybody here.
By the way,
Appreciate
fat bags are the only thing that's okay in the bull market for sure. Totally agree with that.
100%. You know, and the best part is they get fatter as the bull goes harder. So the inverse, right? You don't want to be fat. You want your bags to be fat. No fat. A fat guy can't carry his fat bags around very well.
Not very
I
confidently.
shouldn't be. I shouldn't be that like critical because I used to be 315 pounds. So
And keep in
I
mind,
mean,
like, even
you
the
know,
word fat is like we'll call it overweight, right, or obese, but it's just more so holding our community to a higher level. Like we are so particular as Hexicans to hold people in the community to such a high level because of what Richard teaches everybody, right? We've learned from him. We are able to skip the line on all the BS mistakes typically that other people make in the crypto universe. If we can incorporate that kind of level of attitude and mindset and discipline in other areas, not even just like health and wellness, right? But a lot of areas, we can just rise to the top, stratospheric rise to the top as it pertains to a crypto like group and community. Imagine the most like in shape, just hold your keys, right? All this stuff coming into play here. And then every other community is just like a wrecked group of plebs. And I hate to word it like that, but like just that's another way to stand out. So I just put it into that category of like Hexicans are very particular, which I think is a good thing, but that should expand to other horizons. And I see a lot of Hexicans posting up like really amazing improvements to their health. Like probably the only people I see on Twitter doing so is in the Hex community. I'm not saying it's everybody in Hex. Obviously, it's still a very small percentage, but shit, I don't see that in like the Sheep community. I don't see that in Doge or any of these other communities. You can't even see people's profile pictures. It's just like a stupid picture of a monkey typically. I'm like, dude, like
like where's the human, right? It's just chasing. Well, I shouldn't be so broad, but you know, with a broad stroke of the paintbrush,
yeah.
generally crypto is a very short-term thinking like ethos, because the technology changes and innovates so quickly that a lot of times it just does turn into trading a ticker symbol on hype. But just Hex is not that, and I've seen some of the biggest parties in crypto ever thrown in the middle bottom of a Mexican bear market. So like obviously they're doing okay. People are dumping hundreds of millions of Hex at the lows, and still they're up hundreds of X. So that's saying a lot about the product.
That's like people selling it. Like we rip up to $8 and come back down to 50 cents. The people who bought at 3 cents are selling at 50 cents. It's like, well, retired is retired, man. You know, like at the end of the day, you can't only be mad as much as you want, but people have their reasons to do things. It's just part of the game.
Okay. I'm gonna answer some questions here, and then I'm gonna pull up the Bitcoin chart. What were you gonna say?
No, I wasn't gonna say anything. You're good. Go for it.
When stream with Gerardo and Kareem the Dream, I do have a stream lined up with Kareem. He's on call that anytime I give him 48 hours notice, he'll be there. That's coming, and Gerardo and I have something. I'm circling back with him at the beginning of the month to set something up. So it's coming. All right. So one more axisALiVE question: is Zen bad for crypto? Sorry, I have to ask with all the hype around that project. Just feels it's bad for business. I think like the general approach that the founder's taking right now of like laughing about the fact that his project is like ramping up gas fees on these different networks is probably not a good look. And it might bring in some hate. So I don't. Maybe that's his version of reverse psychology and reverse marketing to like try to get people to recognize it as it's fading into obscurity on this shitty price action on the chart. But I think eventually Zen's going to turn around, but it could be 5 years or it could be 8 years. We don't know how long that's going to be, and a lot of that relies on the founder and his dev team to basically create a layer zero chain that interlocks and interconnects all of the different Zen contracts on all these different EVMs. So there's like that's a long-term giga plan that he's got there, potentially an 8-year plan. So he's got a long-term vision on it. So I wouldn't rule it out in general as far as like long-term price performance. But right now, your money's better spent injecting it into things that are going to move in the next cycle. And Zen's got a long road ahead of it. So I guess that's my most transparent way of talking about it.
Should I give short input, or do you think it'll be too negative?
You can be honest with people. That's what I do. That's my approach.
This is bad. because we're talking about this thing. But Richard usually says price goes up is the only thing most people care about, and then you have like projects, things like Ethereum, right, layer ones that have utility. And even then, sometimes the price goes up, but at least there's utility, even if the price doesn't go up, right? I think that's really the only two things, right? Utility or price goes up. That's it, right? When it comes to holding an asset. And utility is there with Hex, right? It's convincing people to be better with their finances, right? It's convincing people to delay gratification. So you have positive utility, positive use case, and price appreciation. You have both. With Zen, you have zero utility. In fact, it's negative utility. It's just hurting the network. And it has the worst price performance ever outside of a rug. Ever. So even if this thing were to go up, how many times would it have to go up to ever make a new all-time high? So when you really look at it as a whole,
yeah, all-time high for sure. Like that's out of the question. But
even up quarter. I mean, it's not done going down, right? So
yeah.
when you look at it,
The funny thing is you may never get back to all-time high on Zen, but you'll still see hundreds of X. That's what's crazy, looking far enough out. But dude, it's such a missed opportunity and other things that you might as well not wait for that, right? That's kind of my
think of it this way. I'll equate it to my industry. That's like purposely convincing people to be overweight. And not only are you hurting people because now you're telling them and convincing them to be overweight, but they're also hurting everybody else because now they're more taxation on the healthcare system. So it hurts everybody else around you. That's what Zen is. You're convincing people to become obese, which is also hurting healthy people who actually have their shit together because the healthcare system is also becoming more taxed and higher prices, et cetera. It's the exact same analogy. Zen is literally just encouraging obesity in this ecosystem. That's all it's doing. The guy is wasting people's time. People's time. He couldn't have come up with a better idea than that. That's why Richard gets so pissed when people bring it up, because he is frustrated with you Hexkins that actually give this thing the time of day. He's not against people looking at other products. He's against people talking about products that are obviously trash. That's it.
Yeah.
It's like, go be obese.
Your resources are better. Resources and time is spent better other places.
Like there's so many other things we could be talking about. You know what I mean? Sure. Like you have Hedron right in front of you. You have other cool projects right in front of you to talk about. It's just you can tell people are bored. I think Zen comes to light because people are so bored. And that's more of the main problem here is people need to create value outside of staring at charts and looking at this stuff all the time. Not everybody, but I think if people did that more so than not, the only reason I heard of Zen is because everybody kept talking about it. I would never care to talk about this.
Yeah. So anyways, new question. Where do you see ETH topping at this bull run? In your morning stream, you said it may struggle to hit 8K. In my mind, there's no way it's going over 16K. But that's a long-term outlook. It's a long time away, and a lot can happen between now and then. And we'll get into the ETH chart, and we'll get into Ethereum dominance and kind of the thinking behind that as the stream progresses.
Man, there's a good question on your price calls on Hex and both chains.
Okay. We will take a look at the PP chart, and keep re-asking the questions as we go. Actually, I'll star them so I don't forget. What else we got? You discuss how okay, this one here affects your price calls as you mentioned in previous streams. When I'm making those, first of all, when I say $70 to $100, it's not a price call, it's a projection. Like I'm not saying it's going there, first of all. So just make that clear and known. When I say that those are targets, they're targets under different conditions on different time frames. So you need to know what time frame are they talking about and what are the conditions on which that target is met. So if the amount of hex stakers goes to from, let's say, what we're at right now, which just says 118,000 stakers. Well, I would reason to bet that there's probably only like 70,000, maybe 80,000 individuals staked in Hex. And the rest of those wallets are duplicate wallets. Okay. So when you go from 60 or 70,000 stakers and you double it to 140,000 stakers, then Metcalfe's law states that the network value starts to grow exponentially every time the amount of users doubles. Okay. So from 70,000 to 140,000, you're looking at like a 10x increase in price from whatever we're at, 5.5 cents right now to 55 cents. If you can double the staker count, you go to 55 cents. You double the staker count again to like roughly 400,000 people. Maybe now you're looking at a $6 hex, right? From 60 cents to $6. And you double it again to get close to 1 million stakers. Maybe you go from $6 to $60. And that's kind of where that target comes in, is the amount of adoption coming in. And that's where, okay, so that's like the conditions. And now you need to know the time frame. Well, how long is it going to take to get 1 million or 1.6 million stakers in Hex? Well, we don't know, because a lot of the adoption occurs at the end of the cycle when the prices are hitting all-time highs over and over and over again, and the price is just going vertical on green candles. That's when you get the most stakers. I can show you that here if I pull up an old Veblen's Good chart. Or I'm sorry, yeah, Veblen Good. So like if you've been following me on Twitter for 2 years or a year, like all of this data has been out there for a long time, but you need to know all the variables that goes into these calculations. It's not just one line on a chart, right? There's literally thousands of data points that I'm drawing together and synthesizing for you guys to help you understand how certain price targets can be hit over the long term. So here on this gold line, that's the number of stakers and the growth over time. And this chart's already a year old. I posted this May 30th of last year, so it's almost a year. You can see that when the yellow line goes up at a faster rate, that means that the amount of new stakers per day is going up at a faster rate. Well, the fastest and biggest increase in stakers occurred when the price was going from 25 cents to 56 cents, which means that regular pleb money comes into the market when the shit's going parabolic, not when it's at 6 cents, right? That's why you guys are smart for listening, because you're front running the regular average Joe investor or crypto person, right? Because there, a lot of that massive adoption from 200,000, it might take us all this year and into next summer to go from 70,000 stakers to 150,000 stakers. And that might get the price from 6 cents to 66 cents or something, right? But then that next year, you could double the stakers in 1 year, because you could see a massive bull run and huge wave of adoption on both chains, on one chain. Don't matter. The point is that those targets are directed directly at the ETH hex contract, just as a standalone. If you want to go and make the increase a condition and say, okay, well, let's say all the economic energy gets divided into two. Well, then you just cut the price target in half. So it's maybe like 20 to 30 bucks per chain, right? That's the easy way to do the math. It's ratios, right? So I hope that answers that question. What else we got? This might be just a simple attack on, whatever he wants to. Anyways, I won't go too much more into that. DCAing is the strat. Yep, we're gonna go into some short-term price targets on Hex and what you could look into DCA in on. ETH price is at war with network value. It simply cannot continue to rise with other crypto assets. Kind of, yeah. Well, since you guys are wanting to know more about the ETH thing, let's go into that. This is the Ethereum dominance chart. And it's important because you can see that on a weekly time frame, ETH has struggled to get over 20% dominance. That's what this bottom yellow line is here. 20%. That means that Ethereum, being the most known, highest used EVM chain in existence, is struggling to gain market dominance. And this is due to a fact of diminishing returns, lower gains, people using that ETH as a utility, like an oil, like, put gas in your car, oil in your car, oils in rubber, oils in plastic. The more demand there is, the more use of it, the more that the price gets diluted across other assets. So ETH is struggling to gain dominance in the market because it's got competition that it didn't have in 2015. And I should say honestly that this goes back to this bottoming point here was November of 19. So before we started last bull run, that's when you saw the most dominance, when ETH really started to gain from its $80 low up to like 5 grand. And then you ever since then, even though ETH is down from 5 grand to 1,600 bucks, it's held relatively the same amount of market dominance, which creates a certain sort of stability, it's what makes it a blue chip, is that it's protecting this range quite well. But the reality of this is you're coming up against this trend line now and this isn't just going to go sideways forever because new competition is going to come in and compete with Ethereum, and that's when you're going to really start to see ETH dominance slip as gas prices get out of control. You know, Ethereans chase gains in Hex and other ERC20s. They're going to exit ETH and they're going to go into other things, which is going to lower the market cap dominance. Even though ETH can go up from $1,600 to $8,000 or $10,000, it's not going to outpace the growth of these new coins that are valued at pennies that have real inherent value in them, such as Hex. And then when you factor in things like Pulse Chain, which could come along and completely disrupt the entire space, as well as other innovative things like Phantom or any of these other EVMs, like ETH's got its work cut out for it. It was the first mover, and it got to use that to its advantage for the last cycle. And I just think that you could see this breakdown out of here, and then Ethereum dominance starts to dwindle. Right, you could lose 5% in the beginning of the next cycle. And we've seen that before with Bitcoin when Bitcoin dominance fell in the beginning. So if you go back to the very beginning of Bitcoin, this actually doesn't. This is 2014 March to November of the following year, so a year and a half roughly. Um, Bitcoin dominance was between like 97% of all cryptocurrency and like 99% of all cryptocurrency. And then Ethereum came out in 2015 in August, right around this time frame here. It was actually really bullish for the markets. Both Ethereum and Bitcoin really started to moon off their bottoms in 2015 at this point. But what you had a problem was Ethereum was so young and it was had so much potential and it was such a cheap price. We're talking like 60 cents a coin that when it raised in price, Bitcoin dominance just failed to be able to compete because at this point, Bitcoin was hundreds of dollars. It's harder to push a market up that's hundreds of dollars than it is for a coin that's pennies that has way tons of inherent value in it, right? So then you get this moment here where like literally that 97% dominance rating gets destroyed over the next 2 years. Meanwhile, Richard Hart's calling ETH a scam, blah blah blah, all the hallmarks of a successful product. And now look where he is. He changed his worldview and he realized, look, Bitcoin's dominance is done. And then this cycle played out similarly, where Bitcoin continued to get diluted by the rest of cryptocurrency and the new innovation in the space. So here you are, down at 44% of all cryptocurrency. And so if Bitcoin went from 97% down to 44% of all crypto, and ETH is set stable at 20%, you know, kind of in this kind of diamond pattern for so long, you get new innovations start to come into the market, like Pulse Chain and others. Like Ethereum's set to break down because it's got limitations in scaling and limitations in gas expenditure. I don't know if you have anything you want to add to that, but generally that's kind of where I'm coming at.
I'd agree. Yeah, it seems like Ethereum's product market fit and value has a longer time horizon. Doesn't mean its price is going to go up as hard as Bitcoin, right? There's a difference between utility and price go up. But I think from a utility perspective, it probably protects ETH's ability to maintain a healthy amount of market dominance for a longer period of time than Bitcoin, because Bitcoin's limited by tech and limited by a lot of these things like the whole cryptocurrency ecosystem growing, people becoming more trusting of it, people becoming smarter with it. So yeah, it seems like Bitcoin's going to continue to go down. I wouldn't be surprised to see both of them around 20% at some point. Honestly,
Yeah.
which just gives that much. Like imagine 20% of Bitcoin dollars going into other coins. You know what I mean? Like think
Mm.
about how much money that is. I wouldn't be surprised to see something like that hit in the next cycle. You're going to see smaller rises every single time, and I'm sure you could see that, right? As smaller rises on Bitcoin's dominance chart every time a bull market comes around, and then it rolls over. So it seems like that's going to continue to play out, unless some insanely different, unique narrative comes that really establishes Bitcoin as something spectacular, like a world reserve currency or something like that. But I don't think anybody sees that coming. I don't see that coming. So yeah, it just seems like it's going to continue to roll over here, which just means more dollars going into other assets versus being held in Bitcoin.
Another question here: will PulseX be Uniswap V2 or V3 when we go mainnet? Right now it's V2. The V3 license doesn't expire until May, and so if Pulse Chain didn't launch till after May, then I should say, the devs could implement V3. So it's kind of based on a timing.
Yeah, Richard has said a bunch of times right that like a bridge is not the most high, like that's not the highest priority.
All right, people. Oh, yeah, this is awesome. This is a really good point from Alan. If you haven't seen Radial 1 and Radial 2 from last summer, that stuff is some of the most important data that you can get on where the world's going as a whole. That stuff was created in anticipation of massive world changes coming across the entire globe, and like the restructuring and reordering of the financial system, and then the evolution of the human species become an interstellar race of people, and kind of like the struggles that comes with that. So if you haven't seen those, go check that stuff out. It's on my YouTube channel. It's the oldest videos you'll find on there. Goes back to last summer. And then if you want to see the commentary on it from the chat, because it was very well viewed. The first one had like 500 or 600 live, and the second one had like 300 or 400 live. Go back and watch it on Whales Only's channel, and Jim Rat Crypto I think also had it live as well. I'll bring up the ETH-W question later on because it's not that interesting to me, but what we'll talk about at UFO. So appreciate that. Why I'd stay with V2? Well, remember Hex's best price performance happened on V2, so maybe that's food for thought. You know, once V3 launched is when we saw the bear market start. I do think that the AI narrative is going to be strong in the next bull market. I think a lot of people are going to latch onto that. It's going to be like last cycle was Dogecoin and then the meme coins. This cycle I think is going to be AI. What up, Crypto Sloth? I see you, brother. Yo, yo. There's just so much here, guys. I really appreciate you guys putting good comments in here. Thinks when this Shanghai update comes out, people sell off. Sure, possible. You know, this year is going to be rocky either way. It's the beginning of the bull market. Crypto spring is here, but it could be rocky. You know, when is one t-shirt going to equal 10 ETH? Soon. PM. Trademark that soon. Less than 3 years. My brain can't handle more Axis streams today. That's funny. Yeah, you guys there, I do have a high bandwidth, like a high bit rate. So like the stuff that I'm providing, like you can come back and watch it 2 or 3 times, and learn something new every time. You know, even I come back and have to rewatch stuff and I learn from myself sometimes. So that's pretty cool. He was calling for 15K BTC crash yesterday. Who was Ivan? Oh, it's not out of the question. I mean, I think 18.5, but maybe 15K on a wick. But yeah, just a lot. There's people that's calling for bear calls that still have PTSD from the bear market that really are still in cash in some of their positions. And this is like the last call while demand is picking up and people are looking to repurchase their positions at the best price because they know that the bottom's in, right? And so they're just trying to get the best price lower to try to, you know, get out of cash. And the dollar is kind of set up in a way that it doesn't give you much runway until the market really starts to move. And we can probably go into that now. You guys are just freaking hammering the questions. Like I'm never gonna get to this.
I've just been reading them.
Yeah. Can't wait to see it. Rarity.
I already got one chart to show today. I wanted to give you
pull it up.
The Hex BTC chart.
Go ahead. I'll keep reading.
It'll be quick. We've been talking about, I'm going to circle it, make sure it's in the right color here. Actually, I think it is. So we've been circling that. We've been talking about that for like 2-3 months now, right? We're waiting for this like support to be found on the weekly. This is the weekly chart, guys. Waiting for the support to be found. And this kind of like is signifying to me the disbelief phase. And this last one, we spent around 4 to 6 weeks there. And what you see for me now, what you see for me now over here is the same thing. You see the same thing, finding support. We're on what? Week 2 now, right? You have 2 dojis, finding support week 2. I wouldn't be surprised we see, you know, you do a bar pattern on that, another 3 to 4 weeks there, and then you just see a boop, something like that. My gut feels we have around 3 to 5 weeks left. before
Yeah.
that bar comes in. Me and you talked about this privately, Axis. This is exactly like you're going to see 2 to 3 more dojis here, just like over here, 2 to 3 more. It's the disbelief phase. It's traders coming in and out, people not really believing it's going to go higher until someone eventually just pushes it way higher, and then everybody dumps in and goes, oh, confirmation, like it's going higher, and they're late though, right? Because they're not DCAing in, but this is as clear as it can get. Just like we talked about last time, we saw a breakout. Now it's coming back down and holding where it never could before, right? So this line has provided resistance for the entire bear market. So if this isn't like a confirmation reversal before you see it on the hex chart, I don't really know what would be. This is what this chart allows you to do. It allows you to see a confirmation reversal before you would see it on the hex chart. That's the whole point. It removes emotions from the decision. It removes emotions from the decision on the hex chart. Oh, it could go down to 3 cents. It could go down to 2 cents. This is showing you all you really need to see, because all that matters is price performance compared to BTC, and that's all you really care about. So this was just an interesting thing I saw playing out. So we do have room for another. You see it down here in this pattern. You have room for another red candle on the weekly. So don't be surprised if Hex does. Maybe it does what it's doing right now, or it pulls back to 4 cents. We see that, and you have another 3 to 4 weeks of sideways, and then you have this massive move up. But you don't want to be getting in on this fucking candle here. You don't want to be getting in up here. Like you're missing out on another 2 to 3x by getting in there.
That's a low slippage zone on all the pairs, and like if the price starts to move quickly, like if you're sidelined with like 50K or 100K, you could slip price 5 to 6% up there, or even more if you get into that super vertical move. Yeah, so definitely, this is a pullback to buy in my opinion. I think you're right about that. So for sure, and I like this chart. It's the chart. This is the destiny chart for Hex.
This is the chart that Richard cares about. That's why I would say we would call it the destiny chart. It's the only chart that Richard links, the only one he cares about outside of the Hex chart, but he likes this one even better because this is the truth. Like when people go, Hex is down 70%, he goes, well, so is Bitcoin. Like, what's the issue? Like everything's down. Everything is down. So it's like you can't be mad at Hex. It's following what it's supposed to do here, right? People are going to take profits. So this is the only chart that removes a lot of emotion, in my opinion, when people get very emotional looking at charts. If you want to look at a chart that removes your emotions, this is the one. This is the one that shows you, hey, go to sleep at night. Everything's going to be okay. You just keep doing what you're doing. But this is just interesting. That's all I wanted to say, is that we have this 4 to 6 week period right here, 4 to 6 week period, that we're getting ready for another move. Could be a little bit longer this time. It could be a little bit shorter. The point is time is running out. This is what we're seeing. It's running right along that line here on the wicks, right along that line. So it's going to be interesting. And we'll do another stream, and you're going to see this big fat candle up here. And we're going to be like, hey, bros. Remember Ryan was drawing like an idiot?
Yeah.
In yellow.
By the way, you guys, Ryan called for this move in the end of December and early January. If you go back to the Chippendales streams, he said that we'd make a move up to test that upper trend line, and that we'd break above and test it as support. And so he was about 2 months early on that. And bam, here we are. So opinions on pulling liquid hex before snapshot to avoid EHEX dump, then DCA back into ETH hex after dump. Yeah, we'll touch on some price action possibilities. I got you starred on that one. Will I be doing a live stream when Pulse Chain goes live? I don't know. I'm not sure. Depends on how greedy I am. Just kidding.
I'm just gonna be popping a bottle of whiskey when
Right.
it goes live.
The best strategy then is to take. In my mind, the best strategy is to maybe play a little bit of a risky game with 5 to 10% of your holdings, and then let the rest ride. No one will tell you that. Everyone will say kick your feet up, or they'll say I'm gonna ratio trade. But I think then the safe play would be to do a small percentage to play with, and then let the rest ride. Start staking right away to earn fees on through the PulseX DEX, because the volume is going to be insane. Man, you guys are blowing it up. Good. Someone had 1 million hex liquid. Would you stake January or 1 to 2? Wow, half till 2025 and trade the rest for all-time higher. Would you stay liquid? If you want to know a specific strategy, go to my website and go into the consultations and stuff. They're pretty affordable, and I'll just give you the rundown. We'll drill down on a good strategy for you. Show us one more how to add hex BTC chart to TradingView. Come up here. type in hit BTC.
Oh, pull your screen up for him.
Oh shit. Thank you, Ryan.
Mhm.
Go to your ticker symbol, type in hit BTC colon X USD divided by BTC USD. Hit enter. And then you will get the hex first Bitcoin chart. So here it is again. Um, this is such a solid move. Like, and there's stuff going on in the correlations here.
I do it way different. You want to know how I do it? Go back to your trading view. Mine, I don't have any of that stuff in there. I just type in hex BTC with no spaces, and it pulls it right up.
Yeah. Where are we at here?
If like
Gotta
you already
find
have
the
a
right
chart
chart.
open and you go to where the ticker symbol is, you just type in hex first, hex BTC with no spaces or anything. It'll also pull it up. You just do hex BTC and just hit enter, and it'll pull it up.
Yeah. 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 I think
Bunch
this
of
is
ways.
I think like the reason why I did it the other way, which I don't know why exactly, is like if you go into the lower time frames, it just kind of was screwy. But yeah, no, that looks actually pretty good right now. This chart here. So you can get it either way. It's a lot easier. XBTC enter. Bam.
Yep. It's got the pretty logos there. Look at that, man. It's hot. This chart's hot, man. Like if we brought Rich on right now, I'd be like, what do you think of this chart right now? I'd be like, that looks hot, man. What do you mean? That looks like a giant fucking bull flag. Like, what do you mean?
Yeah.
What do you think he was? Whatever you find yourself questioning things, think about what Richard Hart would comment on the charts that matter. The only ones that Richard cares about, right? Because you really technically only care about what he cares about, and he cares about the hex chart and this chart. And if you ask him, hey, what do you think about this? Does this look normal? Or does this look shitty? Does this look like it's going in the wrong direction? He's gonna look at you and go, are you stupid? Like this looks great. There's
Mhm.
nothing wrong here. Just be
And I
patient.
mean, and then to that point, I was going to bring up the correlations between Hex and the larger market.
Yeah.
Over the last 7 days, Hex has been negatively correlated to Bitcoin and Ethereum, which means that 13% of the time over the last week, Hex is either holding its valuation or going up while Bitcoin's crashing. It's doing the opposite of whatever Bitcoin's doing 13% of the time over the last 7 days. For against ETH, it's doing the opposite of ETH 16% of the time. So it's a negative correlation, right?
Yeah.
This means that Hex is decoupling away from the broader market. It's even 19% decorrelated away from Hedron, one of its derivatives. So
Even
things to
right
think
now,
about.
we're selling off, traders are selling off pretty hard, and Bitcoin's just kind of like super stable, up just a very small amount on the daily, like half a quarter percent. And we're selling down after a really big rip up. We're doing totally different things right now.
Yeah. Bitcoin here on the Bitcoin chart. So I wanted to like really bring this into perspective. Guys, if you have questions, I got to kind of get to the content here. So I apologize, but this is like where we're at in the cycle right now. It's like this is what we're looking at. If this was Hex right now on the linear chart, this is what you're looking at. You kind of rallied up, and now people are threatening to push price down into these liquidity bands. So if I pull up the liquidity viewer here on the USDC pair, you can see how right now we just left the high slippage zone, and now we're in the area of more liquidity. So if people start to sell into this liquidity, there's about $4 to $5 million of liquidity that backs up price all the way down to 3 cents. And effectively, what you're going to need to see is this thing start to create a bull flag. So if I go to the hex chart, we got a red candle right now. A bull flag would bring price. One of the bull flags from the previous breakout, when we went from roughly that 5 cent range to 7.5 cents last time, it took an extended period of time. It's saying basically 30 days from now, Hex can break down, try to hold support above 5 cents. It'll test it as support a couple times on the daily chart, and then you start to build structure up leading into end of March, early April. Now, if you get strong moves out of Bitcoin and Ethereum during that same time frame, Hex is going to overperform because it's negatively correlating, right? So it's going to go way harder than that to keep that correlation coefficient the same. Or Hex goes down, goes flat, sideways inside of this range and becomes accumulated inside of these liquidity bands here, where there's a lot more liquidity to trade. I think ultimately, like some of your people that are looking to accumulate are going to accumulate this range. I know Steph is waiting for 3 cents. Well, that's way down here at the end of this band. So Steph believes that the market's going to flip bearish really hard, and there's some people like Arthur Hayes and others that are big players in the space that are wanting that final flush out. And there's nothing wrong with that final flush out happening. We actually got that on Bitcoin back in the early days in 2015, right? So try to pull that up. If you look at Bitcoin from 2015, there was like a double rally where price went to a high and then it came back down, back to the lows, and it came back up. This is the time frame I'm looking at. So this would assume that if you're talking in hex terms and Bitcoin terms, you had a peak high and then you'd be somewhere here coming down for that final flush out. Maybe you hit the lows here one more time, 18.5, maybe 20K. Maybe you get a black swan, wick down, and then back right up again, 20% off from these levels, and then it's off to the races. And some of the data that's playing into that is from my blog post on my website, where we looked at some of the deeper analysis on Bitcoin mining cycles. You go to axisALiVE.com, click on news logs, and go to the most recent blog post. I went in here and looked at Bitcoin on the golden ratio multiplier, and this orange line on the bottom is the 350-day moving average. If you go to look into Bitcoin.com, you pull up this chart. By the way, if you've been following me the last couple of days, you've seen this already, but I want to make it clear for everybody that's watching for the first time. 2012, price comes up, tests the 350-day moving average. Price breaks down for about 6 months. It comes up for a second test, blows right through to the green level. Price goes from $6 to $9. So, and that happened in no time. You scoot ahead to 2015. Price went to the all-time low, or I'm sorry, the bear market low. Comes up, retraces, comes up, hugs the bottom of the 350-day, breaks down one last time, then rips all the way up to the green line. Price goes from 260 to 440. Fast forward to 2018. Price breaks down to the bear market low, comes up, touches the 350-day moving average, consolidates below it. This time there's no breakdown. It just rips all the way up to the green.
Dude, massive buy for $1.3 million just came in for Hex.
Oh, damn.
Jesus.
This is the kind of thing that I expect to see. That's good. It's good that it's happening live. The thing that's good about this is
it's the biggest buy we've seen in a long time in one single swoop, man.
Let me refresh so we get a clean candle. This means that 5-cent level is being protected. Good luck fighting this kind of accumulation. This candle,
dude, that's a big FU right there.
Completely
Unless
destroyed.
it's the same wallet that was just selling. Unless it's the same wallet.
Well, even if it is, like, this is just traders repositioning, right? This is what bull flagging is, and this is price being protected at the 5.3-cent level. 1,000 ETH buy. Okay.
Imagine you're just swapping over like that. That's some big D cojones waking up on a Sunday going, I don't like this.
Yeah, he's like, you guys aren't getting the lower prices. So cheers to you, Silver, for providing that knowledge live. Thank you. Now, good catch, good eye on that. And this is what I was worried about for sellers is like, well, what happens if price slips back down into this liquidity range right here where there's about, see, these are 50K bars, 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 6, 6 times 50, 300K. Now I'm going to refresh it and you'll see live what happens to the price. Price goes way back into the high slippage zone. This guy accumulated all of these bands, then pushed price into the high slippage zone again. So all it takes is a few $1 million buys or even 500K buys flood in behind him now, and price is back in the low slippage zone. He by himself did that 1,000 ETH buy. Now pressure's way back in favor. And when there was a question in the chat earlier about, a shortage of hex. Well, this chart here, if I can find it. This chart here shows the liquidity, okay? So let me go ahead and show you exactly what I mean, how there's a shortage of hex. So as of January, there was 300 million hex in the pools right here, okay? Well, over time now, it's now approaching March, and the liquidity pools have been completely drained of all the hex liquidity. And that's why this guy came in to make this purchase, was because he knows that the price is in this liquidity bands right here, and he knows that he can take advantage of this extra liquidity without getting so much slippage. Look, he got some slippage here because his $1 million order was much bigger than these $300,000 liquidity could suffice. So then it pushed the price straight out into the low liquidity bands, right? So you're getting this there now. It's really good. This is a really good time for that to happen because now you guys can see it happen live on the refresh, how much that $1 million buy affects price,
Mm-hmm.
even in these thickest bands, right?
Dude, imagine if you had bought towards the end of the band you're in currently, that would have moved price up to 7 cents or
So
above.
we actually had that where the price was sitting out here on the
Yeah.
edges and it was wicking price higher and people weren't willing to incur the slippage, so they let it come back down, which is what creates this bull flagging pattern on the chart, right? So if I zoom back out to a daily, this is a typical bull flag pattern that occurred.
Especially now on this candle that's forming. Jeez.
Yeah. Yep. So that was your confirmation. Now traders will begin to see that and flood in after price. So I'll try to draw this for you here. You can see what I'm seeing. Bam, bam, bam. This is called a bull flag, and that confirmed the low here. It touched the low of the bull flag and wicked right back up on that market buy. Um, and then if you go to my website, I'm gonna keep showing this thing because you guys, there's so much value over there that you need to know. If you go to the technical, go to resources, upper right corner, go to technical analysis, click on technical analysis part, and then if you go into flags and pennants, you'll see here I have outlined for you guys different kinds of bull patterns and bear patterns. Well, we just saw a bull flag. You can see here that price goes up on the staff on the flagpole version. It comes down and chops inside of a range. Sellers threaten the lows of the range, and then it's protected on a bounce. If you get above that level, you come back to retest the high trend line, and it holds and bounces off. You usually get a doubling in price from the you just measure the length of the pull. So if I measure the length of this pole from the breakout being hold on one second, gotta go to the magnet. This is your breakout level. You measure the length of this pole. This is roughly what you're looking at as far as price targets if this plays out, and it goes exactly to the 1.618 level at 14 cents. So this is just mathematics. This here is the 1618, and I just got that live from
That's sexy,
measuring these
bro.
bull flag, measuring the breakout point here, measuring the length of the pole, pushing the pole out off the breakout level. What you need to see as a trader is for this price to come back up here, test and confirm, and this is where the traders are going to load up, is between 6 and 7 cents. But what do we know about Hex? We know that Hex is in this really low liquidity zone right now. And so the amount of speed and violence of this move higher is going to be very, very scary. And if you're waiting to buy out here after 7 cents, good luck because these are only 100,000 Hex bars. 100,000 Hex times set 0.07, 7 cents. That's $7,000 per bar. Even if you had 30 bars here, you're only looking at $210,000, and we just saw what $1 million bid order did with $300,000 of thick liquidity here, and then they push it all the way into the lower liquidity zone. So, hope this is making sense.
I wonder once we see the narrative shift, right? When we shift, what I expect to happen is when we shift, just like we saw in the Bitcoin hex chart, when we shift out of the zone of disbelief, right? That 4 to 6 week period where there's a lot of like it's like a combat zone, right? You have a group of people who are in disbelief that are thinking the price is going to go lower, and then a group of people that think the price is going to go higher, right? There's like this disbelief until people start to align on that we are going higher in the bull markets here, right? And then the buyers take over. But during that period, you can kind of tell the liquidity providers are a little bit slow to updating their ranges because they're also doing the same thing of disbelief, right?
Mhm.
No, price will come back down. We don't want to bring it up. So look for liquidity providers to also more quickly update their ranges as price moves up as we shift out of that range, that time period of disbelief. Like those two things have to happen. And I think that's an interesting thing I've been noticing. That we saw with liquidity providers and how quickly they update their ranges does impact price to some degree. How much? I mean, that's a whole other discussion now. I don't think I'm anywhere near knowledgeable enough to comment on, but I would assume that they're mentally going through the same battle that people who are buying and actually selling Hex
Yeah.
are. So the people that are just providing liquidity, right? They're not buying Hex, they're not selling Hex, they're just providing liquidity, making money on fees, are also in that disbelief phase. And you can kind of see that now too, where it's almost like a battle on where they want to put that liquidity.
Yeah. Yeah, I think most of the liquidity providers by now, if you're a decent market maker, you understand that price wants to go higher and that they're just trying to make sure that they're always active and they can able to shift their liquidity as the price range changes. Slightly higher, slightly higher. The problem that they're going to have is if it slips higher and FOMO pushes prices a lot higher. So I'm going to make the assumption that we're seeing some kind of action on Bitcoin and Ethereum right now. Um, I don't know if that's actually
Wow.
true,
Look
but
at
let's look.
Silver's comments. He said they were doing some chain analysis. He said the guy that just bought that 1.3 mil has 9,500 ETH left.
Yeah.
And he just staked a good bit of it. I think it was like $500,000 worth for 1,140 T shares for like 70 days. So pretty big wallet.
So he's probably trying to accumulate inside of this band here, and this is good because these are 50 ETH locked per, 60 ETH locked per. So what's 1, 2, 3, 4, 5, 6, 7, 8? 55 times 8 equals times $1,600. This is like $700,000 of ETH liquidity that he can still accumulate and then push. So another $1 million buy, he could basically accumulate price all the way up to like 7 cents roughly. I got to look at the Hex ETH chart to know for sure. What's 425? See here. 425.
Wow. We just moved up a good amount on the Hex BTC chart too of that. I mean, dude, we could have a shorter display phase. We could have like 2 more candles.
So he can push price all the way up to the 0.5 fib level against ETH, which would be a 15% move. What does a 15% move translate to on the USDC pair? 6.5 cents. So he can accumulate with his Ethereum. He can accumulate price back up to the 6.5 cent range on the Hex ETH pairs, which would put price right here at this level right here, where this liquidity gets a little bit thicker, and then you're basically relying on the market to absorb it even higher, or market makers shift their liquidity forward even more. And he's not the kind of guy that's probably going to wait. He's probably going to, if he's buying at that kind of a clip, potentially looking to take advantage of where there's the most ETH liquidity,
Yeah, notice
which is right here.
the patterns and decisions are inherently different now versus over the past year and a half of Hex. Like people are so confident that they're buying 50K, 100K, a million per, and just you can tell the confidence that's there. That the confidence wasn't there when we were at 0.018. Right, the confidence wasn't there. You saw the lowest volume. We talked about that in the last stream, and now you're seeing clip buying increasing, ramping up. 500K buys, 1 million buys. So you see this volume ramp up, and it's really inherently due to confidence and sentiment shift overall. And that's like another big indicator. Almost regardless of price performance, you just see the kind of the mindset of buyers is changing.
And so now that you're back in that slippage zone, like you can see here, that some guy comes in and sells 18K on this pair. Might be something more on a different pair. We'd have to take a look, but that you're in that slippage zone. So like you can get a candle print like this on an hourly chart, then this thing can get completely reversed because this is just a function of the low liquidity. When you start to get these, that $1 million buy was way more meaningful than anything that happens after it now for the next few hours. And you can see because before that you had a 369K sell, a 200K sell bar, you had a 165K sell bar, 300K sell bar. And with all of that volume, they were only able to push down the price 6.5% in 4 hours. Meanwhile, this guy wicked price back up 12% in minutes with one buy, and in 2 hours, it's up 8.2%. This is the kind of accumulation you'd expect in a bullish environment, right? So your downside targets are limited if this guy continues this behavior. And I mean that was staked, so it's like this guy isn't like buying $1 million and ready to trade it. He just bought $1 million and staked it. So like he's showing that he's got ammo. If you want to compete with this guy, exit the system is what he's saying. Exit right into my hands.
Yeah, 9,500 ETH left, dude. That's a good chunk of change.
Yeah. What else we got? We had so many questions earlier. That's pretty hot off the press. Somebody said BTC price and dominance seems to chart inversely. Why wouldn't ETH?
More utility. Way more utility.
Yeah, and it's just more stable because it's more heavily used and all the money stays on ETH. So it's some people's moving money out of ETH into their contracts or whatever, or per gas. It's going into somebody else, and then they're switching into there because ETH is needed, right? So it creates a more stable price and like level of dominance. What's going to bring ETH dominance down is going to be new competitive chains, right? That's what's going to make economic energy move off of Ethereum and onto other chains. We're a long way from seeing doomsday for ETH.
Yeah, totally agree.
Not okay. So this guy asked, and this is totally relevant to what just happened. Maybe it's just me, but I don't understand the concept of rare hex. When you mention this in your streams, what does that mean? With so many coins available, how is hex not available? So what we're talking about specifically is the hex on the market. There's only like 70 million hex for sale on the market. Even though there's hundreds of millions of hex, it's in the hands of diamond-handed holders who are, they believe in that they hold the golden goose, and that no matter what, they're never willing to get part with their bag because they can earn yield off the T-share system forever. And so why would you kill the golden goose if it continues to lay golden eggs, and then those golden eggs become worth more and more over time? And there's a class of stakers that believes that and knows that and understands the long-term value proposition of hex. And then there's the short-term thinkers that sells 100 million hex in 2 months, like the guys that sold the price down back here. These guys were exiting the system for good, but a lot of the bear market was just those guys having hundreds of millions of hex, and they were just selling it off and redistributing that hex out to thousands of people. And this is like the redistribution effect that occurs, if that makes sense. So in the pools currently, if you were following me earlier when I showed this chart, the amount of hex in the pools went from 300 million in January, and now they're sitting at like 70 million. So they've completely been destroyed. There's only like 1/4 or 1/3, 1/5 left of the coins that used to be in the pools available for purchase. Meanwhile, the amount of ETH that's come into the market has increased by exponentially, same as the USDC that's in the market has increased exponentially. Did you want to comment on that?
I mean, you said it fairly well. I mean, this is just going to continue to be the trend. Like, here's the thing, guys. These final weeks of disbelief are, to smart players, the last opportunity to not move price with a ton of slippage. Because that's what you saw when Hex ran from 22 cents to 50 cents. You saw people going, holy shit, holy shit, holy shit. It just keeps going. How is this happening? It just keeps going. You're learning how it's happening. You're seeing the buildup take place. You're seeing the sentiment shift. We're in that time frame of like 2 to 5 weeks left. Like, whether you catch 4 cents or 5 cents at this point, it doesn't really matter. That's why DCing it was always going to be the best thing ever. But when that back candle comes on the Hex BTC chart, that's where you see this thing take off for a good 2 to 4 months straight. Yes, there is the snapshot that's going to impact things quite a bit, but that's a whole other conversation. But yeah, I mean, when you see this, really, it's just setting up an environment, guys. This is all this is. It's setting up an environment where you have a sentiment shift, low liquidity. You have players buying at bigger clips. There's an explosion about to happen. You can't ever time the explosion. I'm not going to act like I can time the explosion, but we can give you a decent time frame. We called out 2 months ago that this was going to play up, test the top resistance band on the Hex BTC chart, and hang out there for a few weeks and form support. Remember, we talked about that. Form support on top of the trend line, and then it's going to move forward. But you don't want to be buying when it's on that big candle, because then it's like, oh, it's at 6 cents today. Oh, it's at 10 cents. Now it's at 16 cents. Oh, okay, pull it back to 12. I'm going to wait until it goes lower. Oh, boom, it's back up to 18 now. Holy shit. Now you have to buy 20. That's how it's going to happen. Like, these little pullbacks that I can guarantee you people right now are thinking, oh, I'll grab Hex at 4 cents. Bro, what if that doesn't come? What if we just print the big candle now and we're up at 10 cents and now you're scrambling to buy 11, 12 and also slippage is there because everybody else is thinking what you're thinking. That's the whole point of a bull market. Everybody's thinking it's going to get the lower price. We're out of that phase where the price keeps going down and down.
Everybody
and down.
right now is competing for that best price. So everybody wants lower prices, but nobody's willing to wait for them. That's the problem. It's a race against time to pick up these remaining 60 million coins, or you have to do something like this where you push the price up into a new range as a whale, and then you are forced to accumulate the new range. Right?
Yep.
This becomes the new range. Right?
Yep.
Because then you have to entice people to sell. People aren't gonna. We just had 500 days of selling. The selling's over. So now it's time to flip the idea.
The network is growing. The staker count is going up, and this isn't a bear. Axis just told you how the most influx of stakers came in on the highest price appreciation. We talked about this privately. The most stakers, guys, listen to this. The most stakers came in during our last bull market at the worst time to stake. That was the worst time to stake, between 30 and 50 cents. And I was one of those people. I was one of those people. That is the worst time. Is it the most ideal thing? No, but that's how communities grow. Typically, people who are uneducated are coming in to learn, and that's okay. It's okay to make mistakes, but you got to understand, like, that's where you're competing against a growing number of people in the disbelief phase. Could you get 4 cents here? Sure, you could. That's a risk that if you have no money in the game, I wouldn't take personally. If you already have some skin in the game and you want to wait for 4 cents for another buy, that's not a big deal. Like, I don't think that's the worst thing on the planet because you won't care.
Right.
You won't care if the price goes up to 8 cents, 12 cents. Oh, whatever. I already got my skin in the game. I'm good. That's a different position, right? But you're competing against a growing market. You're competing against more people coming in for pulse trade. Like, there's so many catalysts coming, guys. This in the stock market is just such an obvious signal. This is like Apple announcing ahead of time that we're doing a stock split on whatever, September 30th. And everybody knows that this stock price splitting is going to be a catalyst for higher prices, especially on the run up. And they're going to buy and hold.
Yeah, and we had this on Tesla last year, and we've outlined this so many times over the past 3 months. It's like getting kind of old, but like this was when they announced their stock split, and then you created this giant triangle pattern where the stock was accumulated pre-split, and then you get this 50% run up off the lows on Tesla, and then the stock split happens,
And then you
and
don't.
because the FOMO is so bad, you get 1, 2, 3 chances to sell the high before the macro dragged Tesla down with it after
And
the
think about
stock
how
split.
big of a market cap Tesla is to move 50% on only stock split news. Think about that. Look at the other, they've done multiple stock splits. Same thing with Apple and same thing with Amazon.
Yeah.
The
Yeah,
the
well,
first stock split, Amazon or Tesla went from like, oh, man, it was like 200-300 to like seven. It was like $1,200, something like that. It was nuts. It was like a 3 to 4x. And that's a stock market. Like, this is a stock split. It's crazy, and it's
about to
better
get
than a stock split.
double the coins, man. And
This is a double. This is better than a stock split.
what is going to hold more value on Pulse Chain than Hex? Please tell me if you
I
know.
mean, it's just like
You
ETH
can't
and,
get
and
into Pulse
BTC.
Chain and you can't get into Pulse X anymore unless you're doing OTC deals, right? So like the Hex is probably your next best bet because we don't know if DAI or USDC is going to have any value over on that new chain. Chances are that they don't trade at $1 equals one DAI or $1 equals one USDC.
Yeah,
But
Hex is
you
going to
can
be the
count
most
on
liquid
Hex
pair.
holding it. Yeah, it's going to have liquidity, and it's going to be the thing that you can trade in and out of and get exposure to the Pulse Chain and Pulse X tokens. Those sacrifice phases ended. It's like closed now, right? So that's your next best bet. And not only that, because of the rarity of Hex right now, you can see Hex increase in price rapidly going into this event because people are all going to be needing to get the liquidity pre-fork, pre-stock split, just like Tesla, just like Apple, just like Amazon. And that's why I do believe that, now you're starting to see you're starting to see OG Ethereum whales take notice of Hex, word's starting to get out. And you know how that happens with OGs. You know that they stay in the same circles. The guys that were in Ethereum early probably talk to each other, right? And so if one guy's doing it, if that leaks out too soon, then somebody else comes in and competes for the same supply, and the supply keeps getting thinner and thinner. And that's why you could get a rapid ascent towards all-time highs and potentially test that 40 to 50% range before ultimately retracing, enticing executives to sell their coins, get out of being underwater, creating a new trading range, and then setting up for a nice fat bull cycle. Just reading comments here. Felt very sad for selling. What up, Sir Joyner, brother? Nice to see you in the chat. Felt very sad for selling 37. So bad that in order to get my 10 t-shirts back, I had to stake 25K for 10 years. Don't feel that bad. I hope you meant 37 cents and not 3.7 cents. If you meant 37 cents, you did pretty damn good. But if you did meant 3.7 cents, yeah, feel bad for you. I don't think you're that guy selling at that price, but who knows? We all make mistakes. I'm still trying to accumulate, man. Like, because I don't think, the Hedron trade was good while it lasted, and the volume's now in Hex. So I'm trying to accumulate a liquid bag that's bigger than I've ever had. It's important. You're not gonna want to miss out on the chance to catch this run up when you got people chucking 1,000 ETH in per buy.
You gotta think about what he's thinking. Is ETH going to have a better chance of doing 100x, or is Hex going to do a better chance of doing 100x? And you should be laughing at that statement. Not to mention the stock split on top of that. So as more people understand the facts, like him or whoever that person is, and come in and obviously believe in the system to stake $500,000, even for a few months, all they see when they do that is that the system works. And when they get their stake back and see the yield and Hex come in, they're just more of a believer in the system. That's all it is, man.
Shout out to Hex Live, Paul. If you're out there, brother, I'm open to any discussions. I've heard that you're a brilliant and genuine guy, and I am very interested in what you got going on in that brain of yours. So feel free to message me anytime. We can set up a call. Guy says, I had a couple of bags above 30 cents. That said, as Hex dropped, I DCA'd from 4, 3.53, 2.52, and at 1.8. At the end of the day, you either jump on the boat or you don't. I also bought small stakes at 6 trying to onboard. Yeah, you're going to look like a genius one day when the price is trading in dollars, right? Because of this, again, because of the rarity of the coins on the market supply, right? That's what this comes down to. I never did get to finish our analysis of the overall market. Somehow we got off track. Currently, Bitcoin's trading up against that 350-day moving average now, consolidating below it. And like I said before, the green line is the target within 6 months or less. And I tend to think that it's going to be quicker because on this last cycle, BTC came up, touched it, and then consolidated sideways for 30 days and then ripped to the green line. And then again, during the COVID crash, it ripped down below and within 40 days was back up above and consolidating above at 9K. And then you get the rip to 12.5 during DeFi summer, makes a higher low, and then you go right up to the red line, starting the bull run. I mean, if you're getting a similar situation here, green line's got you set at 39,000 Bitcoin. Well, what do you think is going to happen to Hex? Bitcoin goes to 40K. What do you think is going to happen? Like, obviously, it's going to outperform. That's what it does. It outperforms these big dinosaur coins.
Dino coins.
The other thing that's bullish about the market right now overall is you're 400 days out till the halving. Every day that you get 400 days out until the next halving, big Bitcoin miners and the new demand from new sets of institutional investors comes in and they acquire the coins in anticipation of the halving, where the new inflation becomes scarcer. That means the market gets shrunk, and so they're basically every time in history you get about 400 days out. That's when the reaccumulation begins, and it starts to create a shortage in the market in anticipation of the halving event, which cuts new inflation of Bitcoin for the next 4 years in half. And that's what creates these huge parabolic run-ups. So here we are, 400 days to the halving. We've created a low, and now we're starting to reaccumulate coins again in anticipation of that halving, like clockwork. The other thing too here I got for you guys suggesting that the bottom's in is every time that the dollar price of newly minted Bitcoins gets into this green band on the bottom, I have them highlighted by purple boxes. Every time that the dollar price of newly minted Bitcoins hits the purple box and comes up to test the blue line, that marks the end of the bear market and the beginning of crypto spring, which kicks off the bull run. That happened once in 2012, again in 2014, 2019. The COVID crash tested it in 2020, and then now here again we've had a nice clean double bottom. First time we've ever had a double bottom on minted Bitcoin. You just came up, tested the blue line, and now you're setting up. Remember, we're nicely positioned right under the 350-day moving average on Bitcoin. Price is consolidating around here. Demand is increasing. Inflation's beginning priced in. Federal rates are consistent right now, so you can project a growth curve out on that. It's not, no one doesn't know what's going on. So the price of money is being priced in. You know, again, Hex is decoupling. And ultimately, this is what I see happening: is Hex is gonna get magnetized right up into that 12 to 20 cent range. Remember, our target currently sits at about 14 cents, which is the 1618 on the fib retracement, candle close to candle close, give or take a few percent. Expect some selling along the way, but generally you hit that high slippage zone and there's just no coins for sale out in here. So it's going to force market makers to reposition this fat liquidity bar up in price, and that then will become the new support. Right now, the pairs to watch are the Hex Ethereum pair. That's where a lot of the volume's coming in from. So there's the 1% pair. This zone is likely to get accumulated by large ETH whales that want to get coins. This is like, yeah, and I forget the dollar value of this. It was 55 times 1, 2, 3, 4, 5, 6, 7, 8. Like an average of 55 ETH times 8 times 1600. So there's like a $700,000 wall here where someone can accumulate before pushing it out into low slippage on the 1% pair, and then you have much less on this pair. These are only 20 ETH per bar. So another $1 million buy puts price way out here in the slippage zone. So that whale that just bought is probably hoping somebody comes back down into their range so that they can do a double bottom on the chart. Problem that he's going to have is that you just did such a big buy, you might not can be able to convince people to sell back down to here. But if they do, that's ideal, because then you're getting a double opportunity to buy on less slippage. He secured his first position. Now begins the education.
Yeah. It seems
Well,
like
guys,
March is going to be an interesting month, man. I'll leave it to that. March is, I think, is going to be Hex's month.
yeah,
That's right in the range.
yeah. Statistically, Hex has great marches. Let's see. Axis, what's a mistake you've made in the last year that you'd never make again? Mine was not fully understanding the 90-day staking method for Icosa and adding to existing ones. I mean, I wouldn't be too hard on yourself. Like, if you feel like you missed, like you over allocated to icosahedron and like you're missing a pump in Hex right now, that's the bad way to look at it. That money should sit and accumulate, and then you should be looking to bring new money in Hex before it goes to $1. Like, that should be your perspective. And I'll leave you guys with this. This is why. It's because when you compare Bitcoin Cycle 2 to Hex, it's possible for the impossible to happen. And it's a function of these ETH whales coming in as a starter to get the price back up and moving. And then if you get like the God whale and others to start to jump in too on this low slippage, on this high slippage area where there's low liquidity, the price can do amazing things coming into Pulse Chain launch, right? Testnet V3, maybe that becomes mainnet. There's not going to be a lot of time to decide what you want to do once the trigger's been hit on this thing's going to launch for sure. And we've seen Bitcoin trade sideways between $2 and $10 for like 2 years before it just absolutely ripped from $10 to $200 in 3 months, right? And so we've seen it before with Bitcoin. It's even worse if you figure that that $200 top is right here on this chart. So that in 743 days, Bitcoin went from $2.13 to $1,156. And so, like, if you guys don't think that Bitcoin's liquidity being so low back then is the same as Hex's liquidity now, you know, with this very small amount of users, maybe 70,000 stakers max, every time you double the amount of new stakers, Matt Kaff's law says that you exponentially increase the network value. So it's like a 10x in valuation. And that's just the first 70,000 stakers. You double that to 140,000, you're sitting at 60 cent Hex, right? Take that economic energy at 60 cents. How many other people are going to chase those green candles? Retail or hedge funds or you name it, right? People are going to start to understand the T-share. You guys are so early, you didn't even know it. And so, like, let's look at the data points. Shout out to lookintohex.com for this data. Shout out to Wave3 for providing the lookintohex.com URL to Gerardo for that website back in the day. Little OG Hex knowledge for you guys. This is Bitcoin data point 1 in blue. Blue one is Bitcoin, pink one is Hex. Data point 1, the first top, data point 1 for Hex, we overperformed Bitcoin's price performance, right? So data point 2 is the inevitable outcome of, you know, if you get this next rally up, how high it can go and how violent it could be. You know, whether you do it now or whether you wait till the end of the year or early next year, that time frame doesn't really matter to me because this is just gonna be a slow accumulation. When the moves happen, the leg ups are gonna happen quick. You look at Ethereum in the early days, the leg ups happen quick. They don't give you time because that's just a function of price pumping. So my theory here is that, you know, you're gonna get, if you look at the bottom in blue here, where my cursor is on Bitcoin, you did a double bottom and then you rip straight up. Well, Hex kind of just did the same thing. You came down here, you made a bottom. The double bottom's so small, it's within a few candles of each other. So you can't see it on this particular chart. But then it goes straight up in the same way. So if Hex performs similarly and it meets data point 2 and consolidates sideways, and a whole new class of investors comes in to accumulate Pulse Hex and ETH Hex at new prices, at a new price floor over the all-time high or around that area, the numbers are inconsequential, that you might get this third leg up in the actual, you know, larger crypto bull run, you know, and meet and exceed that target in the same way that Hex overperformed in the last cycle. Not that it's a guarantee, but that it's a possibility. And so when you put that fractal of Bitcoin's second cycle on Hex itself, it's suggesting here that you could bull flag for the next like 30 to 45 days between 4 cents and 7 cents. And then you get the rip up to 20 cents. And then you consolidate between 12 and 20 for another 60 days before, you know, mid-year, end of year, you're just making the move and you're going to go take out $1 to $3. And that's going to set up a long accumulation zone before potentially hitting ludicrous speculative targets in the next bull run. If it overperforms in the same way, the price targets get absolutely ridiculous for like OGs. They wouldn't even believe them. And as a matter of fact, the guys that don't believe them are the ones that are going to be selling between $1 and $3 on this accumulation range because they don't understand adoption, Metcalfe's law, functions of stakers, burn coins versus user supply versus OA supply. You know, you're not looking at the chain. There's a lot of stuff that's transparent, but if you're not willing to put in the work, you're not going to know this data, right? So shout out to all you guys in the chat. I know we talked about a lot of stuff, and there's probably a ton of content that you guys want to see more of. If you guys just want to hit me up on Twitter, message me about stuff you want to see in the future. You know, you can also come in here and bother Deputy Shreds or Deputy Gains, I guess now since you're gaining.
Oh, that's gonna be short-lived, man. Short-lived.
Yeah.
I don't like spending much time up here. I really, really don't.
Well,
you don't want to be caught dead above 20% body fat or anywhere near 15% going into this next bull.
Yeah. Yeah. Stay healthy. Stay sharp. Everybody, we're here. We're live. We're banging. You know, Hex is amazing. Crypto market's heating up. Crypto spring is here. Everyone's calling for doom and gloom, recession. Sounds like a good time to rip up the prices and occur for max pain. All right. So, all right, guys. Appreciate y'all. Appreciate you for joining me this morning, Ryan.
Of course, man.
We'll see
Appreciate
you guys in the next one. Peace.